I think it has been a particularly trying time for SMEs. If you look at the last 4 years, you've had COVID, you've had economic instability, you've had political uncertainty. But what we've seen, interestingly, is that although it has been tough, the SME sector has been unbelievably resilient. And what we continue to see as a business that started off focusing acutely on retail, and over time we've gone across the SME continuum. So we're a really nice barometer for I guess, the health of the SME sector, now being in manufacturing and in import and export and in wholesale, that use cases are changing. So guys historically have been quite defensive in how they've used any excess cash that they've been able to get into, and have actually gone and are now starting to use it for growth-orientated projects.
Let's stick with that same question for you, Craig. Chat us around those key challenges, because SMEs want to grow. At the end of the day, you don't only start to stay small, but you want to grow and ultimately want to scale. So what are some of those challenges you're seeing?
Yeah, I think that as South Africans, we inspired to grow, and we've got massive fight in our culture, and as SMEs, most of us all started in a very small business at some point, and we wanted to really grow that out, and we really I think we've got massive grit. Right, there's a fight on Sunday morning, I believe, of Drinkers du Plessis.
That's right.
There's massive grit, right? So, and I think my personal experience is when I started out with as an SME, prior to obviously PayJustNow and some of my earlier entrepreneurial journeys, access to capital was a massive barrier, right? Going through the formal process, through the formal banking process. We really struggled to actually raise any meaningful source of capital, and we needed that capital to grow. We needed to buy stock at that particular point. I mean, in my particular case, I spoke about earlier, my first business was DJing, buying DJing equipment. I couldn't raise the money, right? I had to go to family. So I think access to capital is massive for these SMEs to grow, and to be able to support their trade. I think it's the responsible capital. It's not the borrow capital and buy a Ferrari. It's get capital, buy stock. It's get capital, fix my shop. Get capital, market to my customers.
But that's kind of like a catch-22, because you can't grow without the money, but you won't get the money because you're too small and haven't grown. I mean, how do you overcome that hurdle?
So I think that's the exact space that the merchant capital team play in, right? Is that in between space where, as an SME, you want to grow, but you're not big enough for the formal process yet. And I think that's where the exact opportunity that's being unlocked here.
Let's talk about that. I mean, the space you're filling.
So what we view is working capital is like air for business. If you don't have it, one of two things happen. Either your business becomes like static, or in severe circumstances it closes. So if you have got cash to grow, your headspace and the way you run your business is much more positive. So I alluded in my previous comment that guys have historically been using cash over the past 3 to 4 years, largely to keep them trucking along. However, what we've seen now is that there's a much more positive sentiment, and guys are using it for growth projects. I'll give you a good example. I was looking at the deals that we funded yesterday. There is a family restaurant in Hillcrest in KZN, been going for many years. They took about 480,000 Rand from us. They upgraded their kids area and entertainment area. What this does is it's efficiency adding and it's business enhancing to the business. And I don't know if you guys have got young kids, but when I go to a restaurant these days, it's actually got nothing to do with the food.
Totally.
So that's been good. Also, I think another interesting point is the relationships that we form with our customers are deep. and we spend a number of years with them. So what lands up happening is guys undertake different projects based on when they can get access to funds from us. I've got another story. So in the early days, I'd say probably about 9 years ago, we had kicked off a pilot with Standard Bank, and we were getting customers from them who couldn't be solutioned by the bank. And I remember there was a guy who had a tuck shop in a rural area in Pretoria. And he didn't have a lease agreement. I remember we got a letter from the chief, and eventually we thought to ourselves, you know what, let's just help this guy. And so we gave him 30,000 Rand. He's still a client of ours. He's taken 11 facilities from us. He went from a tuck shop. He put in a liquor store. He then built a restaurant. He's now built accommodation. The first facility was 30K. 6 months ago, he took 750,000 Rand from us. So there's these amazing stories that if these guys have the ingredients to realize their dreams, they do and they can.
Yeah, this is about partnerships. I know we're going to talk about partnerships in a little more detail in a moment, but it's about relationship building when it comes to supporting small to medium enterprises. It's like the olden day Rolodex. You know, you keep it small, but these are the people I can count on because I know we work well together.
Yeah, so a great example is, you know, with Buy Now, Pay Later, and I spoke to this in the earlier presentation, we have this capability to direct customers or to tell customers about an unbelievable business through our deals capability and through our store directory, which is driving significant volumes of leads to businesses. And I mean, this was again a business that we, and this sort of initiated the discussion with the Merchant Capital team. There was this business where this woman, she specializes in making custom bras and supporting women who need a custom bra. Now, I know nothing about custom bras, and I know nothing about bras, but what she did is she came to us and she actually said, "Can we meet with you, please?" And I said, "Absolutely." And we sat down and she said, "You know what? Buy Now, Pay Later has been unbelievable for my business because a custom bra costs several thousand Rand to make correctly, if it's a correct fit, that kind of thing. And the people who buy my bras can't necessarily afford a single payment of 3,000 Rand or 2,000 Rand out on the onset. But they also can't afford the cosmetic surgery to have a breast reduction, as an example, because that the medical aids don't cover. So they stuck. So with Buy Now, Pay Later, thanks, you've solved this amazing problem, but I now have another problem. I have too many customers. I have all of these people coming and knocking on my door saying, "Please help me, you know, I've got back pain, etc." And I can only help so many. But now I need to grow my business. And I need to raise money for stock, material, machinery, staff, etc., to be able to scale. So she actually asked that we turn her off Buy Now, Pay Later because she couldn't handle the volume of people. So that's an exact use case of where Merchant Capital team would possibly step in. And we would say, look, here's a great entrepreneur, her business is flying, but from our focus perspective, and I'm really a proponent of focus, we are only focused on solving the Buy Now, Pay Later piece to our customers. We are not solving the merchant lending piece, the part where we need to help the merchant grow. We cannot solve it right now. I'd love to solve it, but I can't. But there is someone in the room that can. So, and that's exactly why we've brought the Merchant Capital team on board to say, here's our merchant customers. Their businesses are growing at significant speed. We need to help them. So how can we help them? Over to you.
Yeah, so these are the collaborations that we're talking about now. We're not talking about only you with someone else. Now, fintech and fintech. So I mean, how does that combination work that you serve each other?
So I think a partnership's like a marriage. Okay, you need to make sure that your ethos and the value piece align. From the moment we met the PayJustNow guys, it was comfortable. The guys are ambitious at a values level. We're aligned. They're deeply passionate about the SME. And our value propositions are totally complementary. So there would never be a concern around me thinking that Craig and team are going to try and scupper a deal that I'm doing with merchant X, or vice versa. Let's take it one level deeper. So PJN, and correct me if I'm wrong here, Craig, have got circa 4,500 clients.
Yes, correct.
Okay. Of those 4,500 clients, I would probably assume between 80 and 90%
SMEs.
are SMEs and fit our profile. So if you now go and break this down into, I like to call it, how can 1 + 1 = 3? You go, merchant X has a requirement to do Y in his business, but needs working capital to execute on it. We can fulfill that requirement. Merchant X has also got lots of customers who he or she would like to have buying more from them. PJN can give them a lending solution where they are able to buy at the cost of the product, but split it over 3 payments. So at the end of the day, the merchant's in a better position, can sell more to the the customer who has more disposable income, and our businesses are winning as a result of that. And I just think, like, collaboration is where the magic happens. And Craig at the beginning spoke about focus. And we have been acutely focused from day dot. And I have been suitably impressed because I thought we were the most focused, but they're probably more focused than us.
We'll continue the partnership conversation in a while because I want to stick with that. But I just want to come to you, Craig, and most SMEs fail. I mean, the two of you are sitting here as ones that have progressed and are moving along. I mean, how do you manage that risk when you're trying to get behind somebody who, how do you vet, how do you assume this is going to be one of the success stories? I mean, there's risk in partnering with an SME.
Yeah, there absolutely is risk in partnering with an SME, but you know, sales can solve a lot of things, right? So, and that's why we picked the sales side of the business, and we've really focused on being able to help our merchants grow their top line. Because if they're growing their top line and they're getting more product to customers, and the customers are happy, subject to them being happy, they will tell their friends, and their friends will buy the product, and it'll really drive that ecosystem, right? So we do vet quite extensively our merchants, and we don't just allow any merchant on board to the PayJustNow platform. And there's obviously FIC and all these compliance and AML and PEP screening and all these types of things that we have to do. So we don't exclude merchants, but we definitely can give them the kickstart to drive that growth, which then leads them to the next step of, okay, now I've got the customers and I can sell the product. I need to make the product potentially, or I need to be able to better fit my product, etc.
Yeah, and on your side, I mean, not all of the stories are successful as that one you mentioned from KZN. I mean, there's certain people that are probably looking at you and shouting "loan shark," you know. So I mean, there's that also not beautiful side of the story.
Yeah, it's a good point. I think alternative lending has often been tarnished unnecessarily, or maybe necessarily, but what we did, I'd say probably about 5 or 6 years ago, is we started something called SASFA, which is the South African Small Business or Small Financing Association of South Africa. And we're one of the founding members with 4 of the other big lenders in our space. And we hold each other to account because our space is, we self-regulate. Maybe to speak to some metrics, we are conservative as far as alternative lenders go. And I mean, we funded now probably about 45,000 businesses, and our default rate since inception is below 4%. So we are, like, if you had to say to me what I get out of bed for every day is, I want businesses to come out of loan cycles with me in better positions from when they went in. And as a result of it, they can continue the flywheel and continue to grow.
Do they come to you? I'm just going to stick with him for just a moment for this question. Do they come to you in almost a mentorship capacity? Do you find that happen from time to time?
So we need to be careful not to give advice. but invariably we're a very relationship-centric business. We do lots on the fintech side, but these people are, like entrepreneurs are often alone. They're in the trenches. So when you do talk to them and they know that you have funded 100 other businesses like them, and you are coming from almost an informed position and you understand their pain, you land up having meaningful discussions with them. And it becomes part financial advice, part good friend and psychologist. And as a result of that, they tend to stick, which is important.
So financiers and hairdressers seem to be in the same boat in this one.
100%.
I just wanted to touch on that,
Yeah.
actually, that I think the key to a very successful ecosystem is that the ecosystem must support the customer, talking to your point, that if the customer exits any transaction in an ecosystem in a worse position than what they entered, you essentially have to get another customer to sustain your business. And neither of our businesses are in that side of the business. We specifically in buy now, pay later, it's a thin margin business, high volume. You have to make sure that your customer comes out in a better position and that they can repeat. And in your particular case, where example, the customer's on his 11th repeat, he's on his 11th expansion, he's building rooms, he's building a bottle store, he's building all these types of things. If you make that one of your key fundamental strategies, points, then you're up for then you will succeed.
Can I add to that?
Of course, please, Ryan.
I think more often than I can remember, what we're actually doing now is we're saying no, not now. And that for me has been, I think it's a very important value, because going back to what Craig's saying, and I think what we're doing is we're echoing each other over here. It is so important that these businesses are stimulated to come out on the other side in better shape.
Let's go back to that partnership conversation. We spoke about fintech and fintech. What about fintech and more and banks and taking your innovation into those spaces? Let's talk around those partnerships.
So in 2017, we kicked off a strategic partnership with Standard Bank, who've subsequently become a shareholder in our business. And I think it was maybe the end of 2018, early 19, we launched a co-created product which is called BizFlex. And BizFlex has subsequently become the biggest unsecured business lending product in the Standard Bank bouquet. Now, when a fintech partners with a big strategic corporate, what happens? You need to make sure that can you hear? Yeah. You need to make sure that that the parties on either side are taking things equally serious. Okay. Often, what a fintech does is it looks at the same problem differently, and there is the ability to work faster, and as a result of it, there is acquisition and retention that are brought to the fore. Through the big strategic corporate lens, there is huge credibility. There is a significant customer base. There is massive know-how. And you take those ingredients and you put them together, and real magic can happen. I can give you another example. During COVID, there was an ask from Discovery Health that they were looking to develop a solution for their doctors. I'm not sure if you remember, but I mean, I wasn't going to the dentist during COVID to get anything done. And these guys, their revenue went off a cliff. So we co-created in 6 weeks a product with Discovery where we are able to use medical aid claims as a proxy for a lend, and the repayment of the facility is done in line with how the doctor's practice performs. And a niche or a vertical that we never thought we would get into has now become like a sizable part to our business. So I think where there are inherent skills and there's a will, you can really do good things together by bringing fintech and big strategic corporates together.
you have any examples for us? We'd love to hear from your side.
No, I think that's a great example, right? And also us on the PayJustNow side, our acquiring banks, are both ABSA and Nedbank here in South Africa, and partnering with them, they very quickly realized that we can get to the merchants faster, we can run incredibly fast. We've got unbelievable data science and engineering capability, and we can really onboard those merchants indirectly, obviously through the payment rails through them, and they've seen significant growth on taking market share in that particular case, as to taking merchant trade onto their own banking network. So yes, I think you should not, as a fintech, be fearful to partner with a big partner. Just know that you will run faster, and both parties need to take it seriously. But great things can happen. Yeah, agreed.
Just speaking to the floor that's listening to us at the moment, if you've got any questions, we'll take some questions in a moment. So just give some thought to that and jot them down if you want. Ryan, servicing SMEs, there's now, but we have to look to the future. I mean, I think a successful SME, a successful entrepreneur is not only living for now, but also thinking about where we're going. If you want to share some thoughts about where SMEs are going, where they are right now, and maybe where you see the future.
So I think in South Africa and probably the world, the sector has experienced headwinds. I was chatting to Craig before this, and I was reading to him a piece of an article about a guy who had just interviewed Mteto Nyati, the CEO of Eskom, and how invigorated he felt having come out of the discussion with him. And for the first time in a long time, and I'm an eternal optimist, I think that the wave may actually be behind the entrepreneur. And he or she that's willing to focus, be clear on where they want to take their business, really has an opportunity to do so. And I think from our side, we're going to continue iterating and getting better and being easier to work with, making things quicker, more convenient, in order to ensure that these guys have the air that they need to undertake the projects that they want to.
Where do you see it going?
Yeah, I think I'm in full agreement. I think the wave is behind the SME at this point in time. I think SMEs, again, I agree wholeheartedly, focus. My view is that focus on your customer, focus on service. These are two major underlying areas which, as South Africa, we can always do better. And customers actually pay more for service. It's interesting that you might think that a hamburger costs a lot of money, right? But you're happy to tip 10% or 15% on top of it if the service is great, right? So it's all about that service. And if you can focus on the customer, the service, and then access capital responsibly to solve those problems, then I think the wave is yours to catch.
I like that. Let's open it to the floor. Are there any questions? If you want to raise your hand and make sure we get a mic to you. Is anyone that's got a particular question? We have a question over here. I can't see behind the podium, but there's one over there as well. Thanks so much, Martine. Let's start over here.
Thanks. I just wanted to find out, so maybe let me take a step back. So one of the initiatives that have been done to sort of like bridge the gap in terms of access to funding for SMEs is the introduction of your purchase order finance. But what tends to happen is most, if not all of the organizations that offer the purchase order financing, they actually facilitate the payments to the actual creditor. But I do feel that we definitely missing the point, because these are SMEs that are saying we don't have the necessary funding. So yes, you are helping me out in terms of making sure that I get the material that I need, but there's also the working capital issue that I still need to solve for. And so I just wanted to find out from you guys, do you also see the purchase order funding in that manner, or do you offer it differently from the other organizations?
So it's a good question. We don't prescribe how the funds get used. We look at the underlying affordability that the business has, and let's break this down into a practical example. Let's assume that we approve Joe's hardware store for R1 million. Joe has got a requirement to place an order for 750,000 Rand for solar. And then he's got another 250,000 Rand, which he wants to then go and put down on a deposit for the yard next door. The way we assess it, as long as the business has the affordability propensity to pay back, how he uses it is totally at his discretion. What we do advocate for is that the funds are used for something that is going to add, something that's going to add efficiency and help the business move in the right direction.
There's another question that side.
Good afternoon. I think when I joined Standard Bank, Merchant Capital was beginning the relationship with Merchant Acquiring, and I think great work there being done for the SMEs. I just have a comment, and I'd love to hear your thoughts about it. I've had the opportunity to work with main market SMEs to a degree we believe financially excluded. And also there's also a degree that says they're not formal businesses. But working along with them, I actually quickly discovered that there were formal businesses, just not in the traditional formal manner. And I'd like to hear your thoughts about that and also then maybe the reason why you guys are backing them up from a lending perspective, because at the end of the day, they do have formal systems that they're applying to get, for instance, stock. You know, they combine their stocks in one truck. There's a level of formality that's not traditional, but it's there. So I'd like to hear your thoughts around that.
So what we will do is we will work with formal businesses in the informal sector. We've got two strategic partnerships that I can speak to. So the one is with a company called TouchSides. And what TouchSides are is they're a POS that is used by probably about 11,600 taverns. So what we do is we look at the turnover that goes through that POS system, and we use it as a proxy, and then we either gross up or gross down based on a couple other credit checks, and that partnership is going really, really nicely. Maybe even more interesting, of late, there's another company who we are in partnership called Hello Pay. And Hello Pay have a customer base that is a blend between South African and foreign nationals. What we've done there is we have developed a proprietary credit scoring methodology, and we're actually able to help non-South African citizens. And if you look at what these guys are, I mean, these guys, some of them run absolutely fantastic businesses in wholesale and grocery and hardware and cellular. And it's just about providing them with an opportunity to get access with the funds that they need so that they can buy the stock that they require. But it is when you go downstream, the risk is bigger. And that is why it is largely more underserved. But the guys that get it right, there's a huge opportunity to make a real success.
Yeah, I would love to just touch on a point there. We had a chap come to us, and he sold his first, I believe it was 100 pairs of shoes from the boot of his car. And he now has a brand called Batu. And we backed him from the beginning, and we onboarded him as a partner in terms of buy now, pay later, and being able to. And we really believed he could deliver the shoes, and he has delivered the shoes, right? And it's been an unbelievable journey with the Batu brand, and them rolling out their stores, and being able to facilitate that. So we can definitely help on the sales side, and we do back sole proprietors. And we hope that they journey into the formal trade.
Thanks so much. Are there any other questions? One in the middle there.
Yeah, I have one. My observation, maybe you can confirm if you pick it up in the lending trends as well, is that there seems to be more appetite to lend to businesses that sell specific products or sell specific assets. My experience with us is we a services business, you know. I've seen there's less appetite to lend to businesses that provide services as opposed to guys that sell products. Did you pick up the same thing as well in your book?
So in the early days of our business, I would say yes. But what we are becoming better at, I would actually say we're good at it now, is looking at businesses that are actually asset light. Because what we look at is we look at the turnover that goes through the business. We're not looking at collateral. We're not looking at audited financials. So we've got a very alternative way of adjudicating. And we're doing lots of work now. As an example, we're funding lots of legal SMEs, and we're funding lots of GP doctors. And I believe engineers and architects and all these guys who are really selling time as a result of use of their brain, there's a huge opportunity in that because they are underserved. So perhaps we can have a conversation after this, and I can answer any questions that are more specific to your business.
Any comment you'd like to make on that?
Yeah, no, in the buy now, pay later space, we are a firm believer that the commodity has to outlast the financing portion, right? This is the person buying it. So we don't do services, right? We don't do FMCG because the thing is consumed immediately. We deem the consumption of the services deemed immediately. So from a responsible lending perspective, we don't lend into those particular markets, but it is something that we keep an eye on, but it's not something that we've got the answer for right now yet.
Thanks so much. Gentlemen, Ryan, Craig, appreciate your time, your expertise.